Hello and welcome to FXcast. This is our FXcast market analysis video for Friday, May 6, 2011. In each of our videos, we look for high probability trading setups. We evaluate the gold chart. We come up with a low volatility watch list and then sidebar watch list. We'll review the economic calendar, and there's an education spotlight at the end. With that, we're going to actually start today off with the gold chart. So here we are looking at the daily chart of gold, and what we talked about yesterday was being prepared to see, will the 20 hold up or will it come down to the 50 like we did in the past. And you can see we came right on down, tested the 50. Now this might be response to the US weekly claims that came in much higher than expected, more than expected. I won't use the word much. And so we bounced off the 50, and then we kind of closed at the last swing high. So the question is going to be, well, will this be the bounce, or are we going to go a little bit lower? Now, when we come over to our hourly chart, we can see with the market profile that we're in the light volume area. We're in the light volume area. So you can see, basically, once we broke here, we auctioned into the next lower price level, and there's not a lot of volume here. So, in other words, we shot up, and so there's not a lot of volume, and so that's kind of what we're looking at today. So again, it'll be interesting to see. Certainly, our indicators on the gold says we should bounce here, but we'll see. Now, remember, the comparison we were making was the Aussie. As we come over, look at the Aussie dollar. And we watched it pull back with gold, and also the pound dollar, and we watched it pull back with gold. And then the interesting thing was we said that the euro dollar, which was holding up, not only pulled back, but almost caught up to what the Aussie and the pound dollar were doing. So you can see the channel that we talked about, and we broke right through it. And now is this past swing high now going to be support for the euro dollar? This may be a buying solution. So that's going to be the theme of the day. We have the majority of the pairs that have pulled back, and they've come to a level of support, and now we have to watch and see what's going to take us out of here. So let's pull up a couple other ones, and you'll see what I mean. So we're looking at the euro pound, and like the Aussie dollar, like the pound dollar, like the euro dollar, we see a pair that has a good uptrend and has pulled itself back to the 20 moving average. So the question is, are we going to bounce? And there are different ways to play this, as with all of those currency pairs. The simplest strategy is when we take out half of the candle that brings us in, that is one safe entry. Some people wait for the entire candle to be taken out. Half of the candle is right around 89.25. So if you want to go long, and we take out and what's good about that is that takes out these wicks. So around 89.25, we have a potential long. The other way to look at this is that if we break below 88.40, here's a little swing high here. Our wicks are right here. This may be breaking, and you may be able to trade this to the downside. Keep in mind, it's still counter trend, so the risk is higher. But the two ways I will be looking at is that to go long, I will be looking at all of these. I'll be looking for a half of the candle, or some bounce here, but I think half the candle was fine. And we can see on our market profile that even once we do get through the 89.45, most of the volume happened up here at 89.95. So what we'll probably see is that you can see for the most part we just fell really quickly. Our market profile shows that we don't have a lot of volume. So we should, if we're going to bounce, again that is an if, we should easily come right back up until we hit the high volume area. So on the daily we said 89.45. On the hourly, you might go with 88.85. 88.85, those are our candles that brought us into our low. It's also half of this candle. So more aggressive entry And so we know with the shorter time frames we can have false signals. So you got to watch that. But I would imagine if we bounce, because of the light volume on the move down, we should be able to travel back up just as fast. Now on the dollar pairs, you'll see a couple things. So here's the dollar Canadian. And so this was been a nice downtrend. And for the most time, every time we've hit the 50 moving average, we've made a new low. 50 moving average, made a new low. Come up, we did break, but we tested it, made a new low. This time we air kissed the 50, made a new low, and so on. So what we need to be watching here is a couple of things. First, it's obviously great that we've come back to the 50 moving average, but you can also see these wicks in here. You can see these wicks, and that matches up with the consolidation over here. So for me, on a daily chart, this is our go long to at least see if we can get up here to the next swing high, counter trend. But what we should be looking at is the down move off of the 50 moving average. It was not able to close way above the moving average, just basically above the 50 moving average. So what you probably want to do is, again, as we talked about, you can look at half the candle, maybe around 96.30 as a way to go short. That would show us that it did fail at the 50 moving average. Or you can come over to the hourly and see that we've got high volume at 95.80. Our point of control is 95.80. So, but we have two volume clusters quite close to each other. Here on the hourly, we can see that we get to light volume around 96.35. Well, look at that. Look at that. So daily we said 96.30 because of half of the candle, and over here 96.35. So that probably would be my short, that we're failing at the 50 moving average once again, and let's see if we can reclaim the day. But keep in mind, if you want to probably put your first target at this first high volume area, second target at this second high volume area at 100 pips, and then if we get past that, let it ride. Finally, we have the dollar franc, and we can see the same thing, possibly basing here. And maybe this one is going to make a run to the 20 like the dollar Canadian. So what I'll be watching here is that on the daily, you can see we've already basically taken out the candles coming in. So this is a good sign. We can see on the hourly that as we moved up, we have lighter volume, never really built out, starting to build out right here. So I would feel comfortable, if we make a new high, to consider going long at the high of the day. I'm not ready to go short yet, mainly because, we do have this huge cluster here. Maybe you could do an aggressive short, but for right now, I would hold off on short, let it get up to a moving average, and let's short the retracement off of that moving average. With regard to our low volatility watch list, at the current time of our taping, we don't have any, but again, we're going to try to come up with a way to alert you guys about these each day, because the majority of them all work today when they finally did set up. Our inside bar watch list is only the pound Canadian. Let's go take a look at the economic calendar. Well, here we are looking at the economic calendar on forex.fo, and some things that kind of grab my attention as we scroll down a little bit. Of course, we have the job situation here in the States. We have the non-farm payroll. That's going to be a big impact. And then unemployment, but obviously whether or not there have been or have not been jobs created, that's going to be important. We also have unemployment information coming out in China. Obviously that's going to be first. We have PPI index for the pound, and this is basically a leading indicator of inflation, which can affect interest rates and whether or not people are paying more for goods, gas, and bread, and commodities, and whether or not they're going to pass it on. Those are the three that really catch my eye. We also have the Canadian labor force information, so that's also going to be big. So we've got the China unemployment information, we've got PPI inflation on the pound, we've got the Canadian labor information, what's going on as far as unemployment rate and the employment change, and then in the States we also have more information about jobs and employment. Okay, as we finish off with our education spotlight, you hear me talk about in our video and when we're talking about our trades, high probability trading, and this is how we are setting up the videos and the types of trades that we're sharing. There are a ton of more trades that we could be sharing, but we want to focus on those that are, again, falling in the category of high probability trading. So we're looking for a low risk to reward ratio, and we're looking to have trades that are back tested. And most trades that are trading with the trend and have defined exit stops and have defined targets, it's all about high probability trading. Know what your risk to reward ratio is, know where your target, know where your stop is. That's your risk to reward. Trading with the trend and not necessarily against the trend. Now, we can trade against the trend, but you have to know that you're trading against the trend and adjust your management strategies based upon the fact you're trading against the trend. So those are the type of trades that we'll be sharing, and we hope that you'll take time to back test your system and check your trade management skills and strategies so that you are a high probability trader. Thanks, guys, and I'll see you next time.